Good morning, ladies and gentlemen. Thanks for the invitation. I am representing EUAPME. This is the European Association for Craft and Medium-Sized Enterprises. In our organization, we are covering about 12 million of the 20 million SMEs in Europe. And my task today is to have a look on SME financing point of view on the capital market union. SMEs are, okay, we have a little bit more than 12 millions. But you have to be aware that these 12 millions are not a homogeneous group. Yeah? We have 92% of them are micro-enterprises with less than 10 employees. 50% of them are single-person companies. And only very few are medium-sized, which means 50 up to 250. When we discuss about SME finance, the overwhelming majority of these companies is depending on lending, bank lendings, leasing, factoring, as a kind of form of lending when it's about external finance. And this will stay also after the capital market union. When we discuss with experts about how many SMEs have access to capital markets, the moment we discuss it's 1 or maybe 2%. The very optimistic say 2. And if the capital market union is very, very, very successful, we will discuss if it is 2 or 4%. The other 96% are our clients. So we are looking to them, and the question was put forward to me is a little bit about what about bank lending, what capital market union means for bank lending, how local banks can finance local companies, and how this works. The real problem in bank lending to SMEs is that during the last years, banks, for different reasons, not only because of the crisis, are less and less able and willing to take risk. And lending to SMEs is risky. It's maybe a little bit more risky in Greece than in Germany, but lending to SMEs is risky. And lending for investment or for innovation is even more risky. So what we can do in reality is to say, okay, classical bank lending, where banks are not really able to take risks, should also be lending for operations which are not that risky, working capital, for example. But it is very, very much more difficult to do classical bank lending for investment and innovation. Therefore, we may need other instruments. For example, mezzanine finance and these kind of things. So here we are already on the border to the capital markets. But in reality, if you look around to the public debate we have in Europe since 10 years, it's the question who takes the risk of SME finance. The first answer is always the taxpayers, the public sector. Yeah? We need new programs, etc. Also in the EFSI now, we will double the money available at European level for SME finance. Hopefully, this additional 5 billion, which the European Investment Fund will get, will be used for long-term finance and for riskier finance, for investment and for innovation finance, for example, and not for traditional loan financing. The second possibility, and this is also now a core in the Capital Market Union paper, is securitization. Yeah? Let's lend to SMEs and then sell the risk to the investors market. Fantastic. It works sometimes, yeah? But also here in the operations we have seen 2006, 2007 on securitization SME, in the SME area, all of them have been publicly supported, and there was guarantees involved from the European Investment Fund, from the KfW in Germany, and others. Thinking that securitization of SME loans is the way forward to bring the investors into the SME finance will not work in the long time. Because imagine a small enterprise get a loan and have to pay interest rates. Yeah? With these interest rates, they have to finance the administration of the loan, the capital, the profit for the bank, the risk the bank is taking, the profit the company want to take, which organized the securitization, the investor want to have profits, and all this together has to be financed by the interest of the SME paying for this loan. This is too expensive. This is not really realistic. But we always say, if it's helpful for a moment to kickstart lending to free bank balance sheets from old loans. It makes sense to help with public money, with money from the regional funds, structural funds, to kickstart SME lending in countries like Italy or Greece. Again, here we are not against them, but we don't believe that securitization in the long run is the silver bullet to do bank lending and link them to the investor market. What we also see, and this is also very interesting in the figures in the green paper, is that SME lending is specifically difficult in Greece. 67% of SMEs say we don't have access to lending. But 68% in Netherlands, that's a surprise, compared to, let's say, 12% in Germany. And the reason is that in countries where bank lending is dominated by large commercial banks, we have seen much more difficulties on lending to SMEs than in countries where bank lending is dominated by small local banks, saving banks, cooperative banks, and similar things. And therefore, if we really would like to do something, we have to think about how to help the small local banks, or maybe how to create conditions that new small local banks, credit unions, cooperative banks are created. And this is not only, it's also about the calibration of, this, potential rules, it is also about administration. The small local bank in Europe has to fulfill the same regulation, CRR, CRD4, like the multinational banks. And we will start now a debate with the Parliament and with the Commission. If it's really, it has really been the best decision Europe ever made in 2004 when we decided to apply Basel also for the small local banks. This may be the wrong way. Maybe we can solve this problem also by applying proportionality rules, but we also should think a second time about, is it really clever to apply Basel agreements which are done for large international banks also to small local banks? In the US, they don't do it, yeah? And in many other places, they don't do it. Yeah? So this is one of the question points. And the last point, which is important for us, is the question how we can make SME lending less risky. And here it's about if an SME has a higher equity ratio, not by external investors, but by keeping more profit in the balance sheet. If equity is better treated from tax systems than at the moment, then it would be also easier to get a loan. Yeah? If you have 30% or 40% equity, then it's easier to get a loan than you have only 10% equity. And in many countries, we have still tax systems which really give incentives to bank lending and disincentives to equity finance. And this has to be changed, and this is touched in the green paper, but good luck to change it. Yeah? This is one of the questions for the country-specific recommendations. But it's possible. You can do something here, and in some countries, they did something. The last point I want to mention is crowdfunding as the new alternative for SME financing. What we see on the real market at the moment is that crowdfunding is still to 85%, or maybe I'm not totally correct, yeah, is donation. Yeah? And the rest is a little bit lending and even fewer in its investment. And I'm only looking forward if this is increasing and we have the first frauds and scandals, we will have regulation which are even worse than we have at the moment for small stock exchanges. Yeah. And then it's dead. Yeah? This is not the future. Therefore, and it's also, is it more clever if you, last sentence, yeah? Or last two sentences, it would be much more clever if you combine lenders and investors in cooperatives and you reduce risk. Then you do it case by case. Also here we have a certain opportunity to go in the direction of new lending. So therefore, Capital Market Union will not really help SME finance a lot, but it's a good occasion to discuss SME finance. Thank you very much.